Good morning, students. Now we are going to go through the first chapter of your business study, nature purpose of business. So we'll be going through the first topic, history of trade and commerce. So let us understand introduction part. The chapter here is divided into two parts, that is history of trade and commerce in ancient India. So here they will be talking about the ancient India, what was the trade was all about, and after that it will be nature concept and purpose of the business. Okay. Now history of trade and commerce. So India has Himalayas in the north, bordered by water in the south. India got connected to adjoining foreign countries through the network road links to the Silk Route. The maritime routes linked the east and the west by the seas were used for the trade of spices known as spice route. Now the progress of domestic and international trade in ancient India developed due to the flow of wealth through these routes. Many trade center and industrial belt also started. So when in the ancient time when the Indians started the trade, so trade was mainly happening because through the land route and the waterways. So land route is come to be known as Silk Route, and the waterways they were connected to the east and the west countries, eastern like Kazakhstan, Afghanistan, these places, and the west side to the China. So this they were traveling through this waterways. This route is came to be known as spice route. They were selling spices to the other country and they were earning wealth. When they used to sell, they used to get gold in exchange of it. So this is how India has accumulated lot of wealth in the past. So this way the Silk Route is also there. Silk Route is a roadways network. At that time there were no proper roads, but the routes were just like, suppose this is Himalayas, so in between there are passages. Like here the passages are there, so they used to travel from these passages. So they used to reach the foreign countries through there, and this route came to be known as Silk Route. So many trade center also established at that time point of time. In ancient past, some traces have been also been found in the ancient times, like Mohenjo-daro and Harappa culture. Now, archaeological evidence means those people who used to dig the ground and try to take out the thing and find out history of it, have shown that the trade and commerce were the base of the economy of ancient India. Now these people they tried to find out what was the base of the economy, how the India was earning so much of money. So they tried to find out by just digging the ground and finding out the connections of the trade of India with the other foreign countries. The trade was mainly carried out by the water and land. The civilization like Harappa and Mohenjo-daro also established commercial connection with Mesopotamia and traded in gold, silver, copper, and colored gemstone. So the connections of the Mohenjo-daro and Harappa culture connect, they're having connection with the Mesopotamia, and they used to trade in items like gold, silver, copper, which are of high value. So this is how India accumulated a lot of wealth in the past, and this was happening. Most of the trade were happening either by the landways or by waterways. Now the period was marked by substantial commercial activities and urban development. So in this period, the commercial activities were progressing, means we were exporting a lot of things and we were not importing too much things into India. So at that time, our trade was very good. That means we were exporting and we were earning lot of wealth from others. So urban development also started taking place. Slowly India began to civilize. There were some trade regulations, different type of coins and weighing practices. Later on, some common accepted measures were developed. So at that time, there were no common measure for weight. Maybe at one place the 1 kg means something else, and other place 1 kg means something else. So these dissimilarities were because of unknown places, and they don't know how to trade with each other, and they were just if they are trading with somebody, so they don't know how much will be the weight, so they decided the weight and measure according to themselves. But later on a proper weight and measure act was introduced, so according to that everything was proper, and the value of 1 kg was just equal to the other place, so there were no differences. Different type of coins which were there were introduced by the kings, which were having signature of the kings on the coin, and they were circulated and used to buy goods and services. Now let us discuss indigenous banking system. What is indigenous banking system? India's banking system is a kind of system in which supported the business at that point of time. Now this system was is just not like today's banking system. Like today, the banks are being given the license to do the business, but at that time there were no banks. There were peoples like mahajans, sahukars, and they used to um, just lend the money to the borrowers at a very high rate of interest. So these were the things. These people are came to be known as indigenous bankers. Okay. Now let us read one by one. The metal coin become the common medium of exchange. Now at the time the metal coins were in exchange. If you want to buy something, it will be done through coins. Documents such as hundis and chittis were used to buying selling on credit. If you are selling something on credit, then you can do it by the help of hundis and chittis. So you can buy anything to hundis. So what is handi? Handi is just like a document, a piece of paper on which is it is written. Suppose you have sold somebody a goods of 10,000. So what will be the condition? It will be stated and mentioned in that handi that after a fixed period of time, this person will be receiving this amount of money because he has sold that much of good to the other person. And the person who is holding it, it is a kind of evidence for him that he has sold that 10,000 rupee good to someone. And when the time period will over, he will give it to the authorities, and they will give him that money so he can present it. Now the question comes like whom to whom he is going to present. So definitely he is going to present to the peoples who are dealing in it. Okay, they used to work or deal like a brokers or agents in the handis. So these people you can give to them and you can take the money. Sorry. Now the handis become very popular. Now it involves a contract. It is like a warranty for the payment of money and an unconditional promise. So this works just like a warranty for the payment of the money. So suppose if you're selling someone the goods and you're not taking anything at that time in the past, so what will be the condition? After some time the person can say that you have not sold and you haven't sold anything to me. So this will be a condition that you are going to lose. But if there is something which is just working like an evidence so that you can easily take back your money, so this is the job of the handi actually. So it was like a warranty for the payment of the money, then could be transferred through valid negotiation. Now these hundis can be sold at par or premium to the other peoples. Third point is different types of hundis used by the Indian merchants are. So these are not important. Let us discuss dhani jog, Darshini, and these are divided into two classifications, Darshini and Muddati. Muddati means time period based, and Darshini means if you're presenting it, you can get the payment. So, what is Dhani Jog? So, Dhani Jog is just like a bearer check today, and anybody who's having such kind of hundi will get the payment simply by presenting. So, that is called as Dhani Jog, and whoever is getting the money, there will be no liability on him. After that is Sahajog. It is not Sah, it is Shah. S-H-A. Shah. Shahjog. S-H-A-H. Shahjog. Okay. So it means what? It will be payable to a particular person only whose name is written on it. So liability, whoever the person who is receiving it, so he is bound to be responsible for taking that money. So liability will come to him, whoever received, because the name of that particular person will be written on it. After that, firman jog. Now firman jog is here also, one is darshini and other one is muddati. So firman jog is just like if you are presenting handi, and so that in order to get the payment, the person will give you the payment. It is just like a bearer check today. Whoever is having it, you can present it to the bank, you can take the amount. It is just like that. Here After Buddhati, here also the same thing, you can present it but after a fixed time period. It is just not like anytime you can present it. After a fixed time period, suppose 10 years or 5 years, you will be presenting it and you can take the amount. It is like that. Now Dekhan Har, it will be like just name written on a document or a handi, and the person whose name is written on it, that person will receive. So it will be payable to the person whose name is written on that particular handi. This is called as Dekhan Har. Now Dhani Jog is again we already discussed. Now this is the only difference is the time period. You can receive the payment but only after a time period, and there is no liability on the person who is receiving it, because this is just like a bearer check. Suppose you are taking check to the bank and you lost check on the way, somebody else has taken it, and whoever receives it, it is just like a bearer check, maybe a like with the check which is not cancelled. So if your name is written on it and the account is also there of the same name, you can take that amount easily. Okay, because it will be payable at counter. After that, now after that, jokhmi is there. Now what is jokhmi again? Suppose if you're selling somebody, okay, some goods, and he is about to receive it. So what will happen, you are selling somebody on credit, so you will be having that document with you, that you can present it, you can take the money. But suppose that the person to whom you are sending, he has not received the goods. So in this case, he will not be paying any kind of money to you, because if the goods are lost in transit, so it will not be encashed. But if the goods are sent to him, then you can encash it. So it is just like jokhmi is just like an insurance. It will be safe both for the buyer and the seller, because the seller will also be happy that he is having some evidence, and if the goods are lost, so it will not be condition that the buyer will have to pay, make the payment. It will just work like insurance. At that time, it is called as jokhmi. Now after this, the development of the indigenous banking system. So here the people, how this indigenous, here we are going to learn that how this indigenous banking system developed over the time. So the first, the people begin to deposit metals with the lending institutions such as bankers or sets. So at that time, the sets are called as the bankers, indigenous bankers. Okay, so the people used to deposit the items like gold or silver, and they take the money for doing their businesses. Second, these bankers and sets become the instrument of supply of money for producing more goods. Now this institution was supplying money like anything, and by the help of that, the people were producing more good by putting that money into the business. Now indigenous bankers played a special role in lending money and financing domestic trade also. So when the question comes up for the domestic trade, so indigenous bankers again playing a special role, because they were lending the money in order to boost up the domestic trade of any particular reason for the domestic area. Now, agriculture and domestication of animals also help to generate surplus and saving for the investment. Now, this money helped the agriculture people to just purchase the animals and use them for producing milk or in agriculture, and they were able to produce more. When the more crops were produced, it was easy for them to sell the surplus crops into the market and earn more money. And when they earned more money, they invested back that money into their business. So it is just that due to favorable climatic condition, people of India were able to raise 2 or 3 crops in a year. At that time, the rainfall was good, so that's how they were able to grow a lot of crops, and they were using those crops in household also, and the surplus they were selling. In addition to the agriculture, by resorting to weaving, dyeing, fabricating, clay pot making, sculpting, cottage industry, masonry, manufacturing, transportation of like car, boats, etc., they were able to generate surplus of investment. Now, not only in agriculture, but in different activities at that time, a lot of weavers were there in the countries, fabrics were being made, clay pots were being made, cotton industries were there, manufacturing of car and boats for that. So whatever the type of business was, the money was provided by this indigenous banker, and the people used it, and they flourished in the business. And when the money came to them, they invested that money back into the business. Now, sixth point, development of karkhanas or workshops. So these workshops here, skilled artisans worked and converted raw material into finished goods. Family-based apprentice system was practiced so that their art and skill could be transferred to the next generation. Now, because of them, what happened? The workshop were being established. So here, the artisans who were specialized in making some goods, so their children were also taught. Apprenticeship is just like a training where you're training the young ones to pass on the skill, so that in the future they will also be able to earn. So they were just simply passing that skills to the younger generations. Now, rise of the intermediaries. So intermediaries, the person is, it is called as the middleman who stand in between, just like a agent of broker. Suppose if you want to buy a house and there is a seller, of course, of that house. So a broker will be a person who will be standing between buyer and seller, and he will be charging some commission from you. So intermediaries play important role in promotion of the trade. So commission agent, brokers, distributors for wholesale and retail trade. They helped in expanding trade and brought a huge amount of silver bullion into Asia, and large share was in India. Now these commission agent and broker were helping to increase the sales, means export in export to the other countries and within India as well. So they were also earning, but huge amount of bullion means gold, because they were selling it to the other Asian countries, and they were receiving in terms of gold, because gold was not of a very high value at that time, but still it was exchange in terms of goods, exchange of goods and services. Suppose that those persons in Asia, they were not having money resources, so in exchange they can give gold. That's why the India is also called as Sone ki Chidiya, because they were having, India was very prosperous and wealthy at that point of time. The institution of the Jagat Seth also played an important role during Mughal period and days of East India Company. Bankers began to act as executors and trustees. They charged high rate of interest on foreign trades. Now, this Jagat Seth was a kind of person who used to finance the international trades, and they used to charge a very high interest rate. These people were active during the British time when the East India Company was there, and bankers were just working like executors. So they were also helping them to flourish this business. The emergence of the credit transactions and availability of loan enhanced commercial activities. Now, this credit transaction, when this suppose you are selling something in credit transaction, so it just boost up, and loan you are also getting. So when you get the loan and credit transaction happens, so all these things exceeds the exceeds the commercial activities. Just like it is happening today, we are having banks who provide such a loan, and the credit transaction also happens. Like when we do business, when we're doing wholesale or retail business, what we do, we sell our goods on credit, and then after that sometime we can receive money. So this is happening at that time also. Now, next point is, sorry, let us discuss this line also. India enjoyed a favorable balance of trade where export exceeded the import. So at that time, what was the condition of India? India was known as the exporter of goods. And what is the condition today? India is called as the importer. So at that time, we were so um, maintained, like we were just selling the surplus to the other people. We were so good and rich at that time. But today we are having lot of poor people in India, and we are importing so many goods. So the conditions are being just reversed. Now, next point, India's banking system benefited the manufacturer and traders and merchants. Merchants are called as the businessmen with additional capital funds for expansion and growth. So, who are the real profit makers? Like manufacturers, like somebody is opening a company, traders, the person who are indulged in the trade, and merchants, like additional capital funds for growth. So they were able to earn a lot of money for the expansion and growth. So indigenous banking system was somehow helping to boost up the trading in India. All this commercial activity really boost up because of this indigenous banking system, though they were charging a lot of interest rate, but still the commercial activities were happening. Later on, the commercial and industrial bank also provided short-term and long-term loan. Now, after that, what happened? This commercial bank and industrial bank also established, and they also started providing short-term and long-term loans to the trader. So this has given an extra boost to the towards the commercialization or economic activities in the country. So this is how the business activities were taking place, and really the business was boosting up. Now let us move to the transport. So as we know that India has been trading through land and waterways transport. So let us go through land transport. Road has assumed a key role in the entire process of growth. So at that time, India was having a very poor growth of roadways because we were not having good roads at that time. So we were simply having all these kacha roads over there, and from that we were doing our business. The northern roadways, that is towards Himalayas, has stretched from Bengal to the Takshila. Now, Takshila is an university. It's a place which has been located now. It's in Pakistan, which has been established by Chandragupta Maurya under the guidance of Kautilya. So now from there, Bengal to Takshila, there were also some trade routes in south spreading east and west. Trade routes were wide and suitable for speed and safety. So this land route which was made, it was able to cater the speedy transfer of goods from one place to the other with safety. So this is how the roadways was connected. Now second was waterway transport. Maritime trade was another important way of global trade. Malabar coast, on which the Mudris is located, has a long history of international trade. Pepper is known as the black gold. So here, on in the coastal areas of the India, suppose this is India, and these areas are the coastal areas. Like this is the Coromandel coast, and all this Malabar coast is here. Okay, Calicut coast is here. So all these coastal areas were important because from here the business was being done. So this trade was going through all these coastal areas by the help of waterways. So the paper was also called as the black gold. It was traded through this route, and many peoples with sorry, not peoples, countries came to know about India. So they were just trying to find India. It was in search of an alternative route to India for spices that led to the discovery of America by Columbus. So Columbus was actually trying to find India, but accidentally he found America. Okay, the Calicut coast again. This is India. Here, the Calicut coast is there in this part. So it was popular that it was even visited by Chinese ships. So even Chinese used to come here to acquire essential items from Middle East. Middle East means those countries like Afghanistan, Kazakhstan, as well as paper, diamonds, pearl, and cotton from India. So they used to trade with these Middle East countries like UAE and Afghanistan and all this, and they used to purchase pepper from India, diamonds, pearls, and cotton from India because they needed to make some articles of Chinese civilization. On Coromandel coast, Pulicat was the major port. The textile was the major export from Pulicat to Southeast Asia. Now here in the Southeast region, the major good which was exported was textile. India was rich in cotton, so textile goods were we were also making some good textile cloths. So it was sold to the other foreign countries from the Coromandel coast. Now trading communities. What are the trading communities here? In northern regions, in north part, it was Punjabis and Multani merchants. So here the Multani and Punjabis were there in the north part of India. In western part, the Mahajans were there. From south, it was Chettiars. They were the important traders over there. In Gujarat and the Rajasthan Bhatts managed the trade. Okay, so Rajasthani Bhatts were there who were managing it. In the urban areas, means civilized areas, the Mahajan community representing their chief called Nagar Seth. So here the Mahajan represented they have made a chief and he is called as the Nagar Seth. The other groups were also been somehow connected to the trade. These were Hakim, Ved, Vakil, Pandits, Mullahs, teachers, painters, musicians, and calligraphers. So these people are also connected. This group are also connected with the trading activities. Somehow they were connected. If you're going to do the trade, and also definitely you're going to need a lawyer. So this is how they were somehow connected. So these were the trading communities. So thank you. Now we'll be covering the next topics in the next lecture.